Welcome. Um, my name is Gio. I've been trading for 2.5 years. I've been staring at these relatively same five numbers for a very long time, so I know how they work. I believe in providing value up front, so instead of creating a course for you to buy, I share my knowledge for absolutely free. All I ask is that if you like the content, please like, subscribe, and you know what? Join our Discord. We got a lot of great traders in there, and we have some new traders like you, if you're new, and that are trying to learn. So come check it out. We got good conversations in there. We got good people. We're doing TA constantly. I also give updates in real time, so you have an understanding on what's going on in the market in real time and real life, I guess, applications to the lessons that I teach. So without further ado, let us begin. Okay, today, again, we're doing ranges, and it starts with support and resistance, okay? Now, I'm not a firm believer in support and resistance because you decided to draw a line here and then you think that that's resistance. I don't believe that. I believe that this whole thing is kind of based around vector candles and where the money is, which, like, it works. I'm not going to say it doesn't work. I can't say that this right here is not support, right? But it works because there are vectors here, not because you drew a line and, you know, it's supposed to hold because you figured that you could draw a line like this and it has to hold, right? So same things that I've mentioned a few times in my previous streams. If you guys haven't seen it, go back and watch it. But let me just preface by saying that. And then now let's get started, guys. Okay, so support and resistance really is the foundation of trading, really. You know, we need to objectively buy low and sell high, right? And in order to determine what is high and low, we have to trade ranges. If you zoom out all the way on Bitcoin, okay, right, you could say right now we're in the middle. Geo, we're not high or low, right? So how would you know whether you need to buy or sell at this point? By trading ranges, right? This is objectively low compared to where we are. Or sorry, yeah, this is low compared to where we are now, but this is high compared to where we are now. So, you know what I mean? It's all about ranges, and that's how you can kind of get into the market. Now, depending on the type of ranges that you're trading in terms of time frame will determine the kind of trader that you are. So we have swing traders, we have scalp traders, we have day traders. I will make a video in the future about that, you know, on which time frames you should be looking at depending on how much time you have, etc. But this is kind of how I do it, and I'm going to show you now. So as you can see right here, Bitcoin has a clear range, right? We're on the 4-hour time frame, so it's pretty long. But Bitcoin has a clear range, and this is the first thing that we're going to look at. We're going to look at our highs. We're going to look at our lows. Now, what I do personally is I take the absolute low of the wick, which in this case was here. I'm going to zoom in. And I mark the absolute low. Now, as the range starts to develop, right, we move our low. So when price came up and then price came down, this was the low. And this, at the time, was the high, right? As price continued to develop, we would move the high here. And then here. And then here. And then this dump happened. I don't know if it took the low. I don't think so. Right? We ranged a little bit in this range. And as you can see, it's a very clearly defined range from bottom to top to bottom to top, right? So right here shouldn't have scared anybody. Also for the vector principle that we talked about last time. But as this wick came and took the low, we would move the low. Okay? Now we're also looking for SFPs, which are swing failure patterns, which we'll talk about. But we adjust our low, right? So now this is our new low. Now you could keep this level on, right? You could say old low, like you can label it, but we have a new low, and that's our new low now, right? When we get our new high, we move our line up and so forth, okay? Until the range starts to develop something like this. So whenever we break out, really you're looking to develop a new range. And especially when we're in a new zone, like a completely new zone. I mean, here, when we came up to 26, we haven't been up here since like last year or 2 years ago. I don't know whenever it dumped, right? We've been way below for so long. So it's relatively a new range. You know, you can start on the smaller term timeframes, and whenever you're breaking out, you're always looking to establish a range, right? We're looking to trade the ranges, and we're looking to determine objectively what is considered high and what is considered low based on the range. So that's the very first thing, okay? And then just by eye, you're looking at support and resistance lines. So again, we're looking at the 4 hour. You can clearly see here, this line, at least up until this point, is relatively respected, right? This was one of our highs. We wicked up, right? We wicked down, whatever. This is kind of its own little zone, right? Our own little range. And then we broke out. We kind of formed a range up here a little bit. We weren't up here too long, right? But that's essentially what you're looking for. So you are trading ranges within ranges. So now it can get a little bit complicated because this is also considered a range, right? But we're on the 4 hour time frame. So it depends on what kind of trader that you are and what kind of time frame you're looking at trading, right? Which again, we'll get there, but there are ranges within ranges. So that's important to note. Now, let's delete this. Now, how can we find a systematic way to find our levels within our ranges? Okay, so if we've already established that this is the range high, and I mean, technically now, because we haven't fully broken down here, I would even consider this our range low, the new wick right over here. So I'm just going to come back here and do that, right? This could be, if we bounce here, that could be a range. Actually, until we bounce, I'm going to keep my low there to know that we're beneath it. But if we bounce, then we move this line, right? To make our range. Now, the first thing we do to identify these levels, and I do this all the time, no matter if I'm trading on the 12-minute or, you know, the 30-minute or the 2 hour, whatever it is. We start by making these levels on the higher term time frames because they are important, and you'll find that your larger term time frames, in this case the monthly, your monthly levels will sometimes be within your smaller leveled ranges. So let me just show that real quick here. Okay, so we're on the monthly time frame. The way that I find my monthly levels of support and resistance are I find two candles, in this case right over here, that like two consecutive candles that were unable to break a certain point. So here you can see there's a wick up. Here you can see there's a wick up. They were unable to close a candle above this level right here. Okay? 29233 on the monthly time frame. So right now we're going to double click this. We're going to write M for monthly. And you can color it the way that you like. I just kind of go in order. It's easier for me that way. So I know a red line. You can also make it, sometimes I'll make the monthly like thicker because it's like in your face, like monthly, you know. But that's a monthly level. Okay. Next is this level kind of here. For 2 months consecutively, they were unable to close below. So this, we can do that. We can put M, right? And that's our monthly level. And we'll just do one more for demonstration's sake. This one is kind of iffy, I'm going to be honest. So if something's iffy, I'll write like, I'll go M and I'll put like meh, right? When we do the weekly, if I find one that's like kind of meh, I'll like, you know, meh it, just so I'm aware of it. But this is a strong monthly level right here. Okay, so this is how we're going to determine what our monthly levels are, right? Then we come down to the weekly. And by the way, this is ugly. Don't look at all this, but I take all these levels. I take these levels and I will put them in a folder. Let me just make sure because I made a couple extra lines. So that one we don't need. Okay, and this one, whatever. So I'll put them in a folder and I will call them monthly. By the way, this is not my actual chart that I chart with. That's why I don't have any levels right now. But on my actual Bitcoin chart, I have levels. Okay, so that's how we find our monthly levels, right? Then now we jump down to the weekly time frame. We hide our monthly. We don't need it anymore. Now we do the exact same thing on the weekly time frame. So we have two candles here that were unable to close. We have a weekly level here, right? I make it orange. I put a big W, right? And so forth. The same thing weekly here, and we'll copy paste it, move that there, right? And then one over here as well. Okay, so you're finding the bodies, right? One over here as well. So you're finding the bodies where they wicked and they were unable to close. These are our current weekly levels, and these come down far, guys. Like this is 16K, right? So you're not going to find too many of these, you know. And then you can also go back in time. So this is a weekly level up here as well, right? 2 candles. Actually, this weekly even goes as far back as here, but yeah, 2 candles that were unable to close above consecutively. That's a weekly level, right? We come over here, we create a group, we change it to W for weekly, and weekly's done. Okay, and then we do the same for daily. I'm not going to do it, but you know, we do that. Now, when we come back to our 4-hour chart and we're looking at our local range, right? We already determined that this was our range low. You know what? Let me do a daily. I'm sorry, guys. Let me just do one daily so you can see that they do cross, right? This is let's hide our weeklies. This is a daily level. Just going to go quick, like super quick. This was a daily level. It is no longer a daily level. This was, yeah, that's kind of the only one. So we'll just put D here. Okay, let's come back to our 4-hour and let's find our range. So this is our range high, we said, right? It's our range high, and this is our range low. And for the absolute highs and lows, I mean, I keep it white, but again, I will make it thicker, not this thick, but I'll do like the second one. And then same thing here. Right? So we have our high, we have our low, right? And we need to be aware of these other levels that are on the more macro time frames. I only do daily, weekly, monthly. I don't find the same, I don't do the same concept for the 4 hours and like down, because you can kind of just see it by eye, and we'll do that in a minute. But right here, you can see we have a daily level relatively close to a monthly level. So right off the bat, this is a zone that we need to be, you know, somewhat aware of, okay? But that's how your larger term time frames, support and resistance, can sort of leak onto your current range, and they are important levels. And we'll talk about other confluences that you're looking for in this range, but this is a strong one, okay? So that's the first thing you're going to do is go on the macro time frames, monthly, daily, weekly, find those levels and see if those levels are within your range, and you need to be aware of them, okay? So let's hide that for now. We'll come back to that, but you need to be aware. Where's my, oh, this is my daily. Or wait, these were the, no, this one here. Okay, so that's our, so this is our high and this is our low, right? Now we'll come on the 4-hour time frame, and because this is a larger range, right? We'll come on the 4-hour time frame, and we'll sort of just by eye, like I did earlier in the stream, find places where price seems to stick. Right here is one, okay? You can clearly see, why are all these lines so yellow and not skinny? Okay, so right here, you can clearly see a few times, you know, we had support, we wicked down, but it held, support, and it's not 4-hour time frame, right? So this is over, you know, 10 days. Like this is a long time frame, but we have support, and then we ended up bouncing. But just by eye, I look for kind of support and resistance levels. This, I mean, could maybe be one. And you're gonna, when you come every day at the chart, you're gonna adjust this based on price action and what's happening, right? Like nothing is ever 100% definitive and you did your TA and you're good forever. No, like I'm sure you guys know, but you need to like adjust it as time goes on. So here we had resistance, came up again, resistance, right? So that would have been a level as well, and that's on the 4-hour. Now, understanding that there are ranges within ranges will be beneficial to you, because depending on the time frame that you're looking at will depend on whether you're swing trading or you're scalping or you're day trading, right? Let's just say at the time, let's just say for this box right here, this little range, right? This is a mini range, and we'll zoom in there in a couple minutes. But let's just say blue border, sure. Okay, this is our little mini range, right? Within our bigger range, which at the time was like this, right? So it's beneficial to you to do like larger term time frames analysis in terms of ranges, because you need to know where we are really at all points in the chart. And right now on this larger area, on this larger zone, we are on the bottom of it, right? Like we're definitely below zero, but definitely below the 50 line, which is approximately here. We're like in the first third of it, right? Or first quarter of it. So just judging by the range itself, we, especially on the long-term time frames, are already favoring longs, okay? That does not mean long every time you're at the bottom and short every time you're at the top. It does not mean that. But in general, when you're close to the bottom, you're supposed to look for longs. And when you're at the top, you're supposed to look for shorts. We're going to talk about volume and the volume profiles in a few minutes as well. But generally, the price respects the range until it doesn't. But it will, again, until it doesn't, right? So most of the time when you short the top, you're gonna be right. Most of the time when you long the bottom, you're gonna be right. Right now, are we in general looking for longs or for shorts? Well, we took our low, right? Let me zoom in more. We took our low. We've spent a few candles here, and right now we're failing to continue the breakdown. Does it mean that we're not going to? No. But objectively, you shouldn't be looking for shorts right now if you're trading on the 4-hour time frame, right? You're not looking for swing shorts from here. You were looking for swing shorts from up here, right? It just so happened that this was the time that it broke below, but what if it doesn't, right? What if it starts to do this? We don't know. So objectively, based on our range, here we're supposed to be looking for longs. So long term, we should be favoring longs. Of course, you're going to look at your indicators and do your analysis and whatever, but you're going to be looking for longs, right? Now, one of the times where you do end up shorting from the top, you will break down below. And when you break down below, you didn't short here like retail, right? Retail is like, oh, let's draw the head and shoulders. Let's put the line. And as soon as we break down the line, let's short. No, because this can happen. Everyone can get faked out. So we short from the top of the range. We long from the bottom of the range. We take profits along the way. And one of the times, it will break below. Is this the time? I don't know, right? I don't know if it is. But one of the times, it will. So if we come down here and we form another range, then we start to trade this lower range, okay? Now, that's on the macro. This is a 4-hour. This is for the swing traders, right? Now let's talk. I know a lot of us are day traders. We're all pretty active in the chat. Let's talk about how we can approach this kind of ideology on a day-to-day basis to not necessarily always wait, a week to get up here or a week to get down here, but we can start trading the ranges within the ranges, okay? So now let's come to the 1-hour time frame, right? We'll zoom into the box. We'll get rid of this one. You guys are aware of the range. So this is our new little mini range, right? Within a range. We know macro, we're at the bottom. We know in general, we should be favoring longs. Again, it doesn't mean to go long blindly and stupidly. That's not what I'm saying. But in general, we should be favoring up, okay? And then really it's as simple as coming to your indicators. Like you can see momentum is moving upwards while we're at the bottom of the macro range. But let's just say it wasn't, right? How do we go about doing this? Well, we do literally the exact same thing, right? We look by eye. What's our support? What's our resistance? You can clearly see there's some support here. Came down a few times. The wick down. Couldn't fall below, right? We have our... I mean, in hindsight, it's easier, but this wick would have been our low when we drop. Anytime you have a huge drop like this, don't trade this drop. Wait for the range to form. So this would have been our range low. This would have been our range high, that wick. And then as price develops, you move it, right? Then it would have been here. Then it would have been here. Then it would have been here. So you adjust the range based on how the price moves. When we came and we wicked below, you could keep this level, but this is our new range low. And the way that I label it is again, the range high and the range low, I make it thicker, so I'm aware of it. And then I'll put RL. This will be lowercase actually, and I'll tell you why. But that will be RL, and then this will be thicker. And that will be RH. So we have range low and we have our range high, right? And we're just trading this. And similar to how I mentioned with the 4-hour time frame, looking at the macro level, right? It will respect the range until it doesn't. And when it doesn't, we're not longing up here and it breaks out, because it could do this. We're not doing that. We're already in a long from here or from here or from here, and we ride it up, right? We take profits along the way, and we'll talk about that during the risk management course. Maybe I'll do next week for you guys, but that is our goal, right? And again, depending on whichever time frame you're trading, you will, kind of have an idea on how long you should hold the trade. I will also talk about that in a different course, but that, in a sense, is what you're looking for. Now, when I wrote this RH in lowercase and this RL in lowercase, the way that I do it, I've never seen anyone else do it this way. I just kind of learned to do this on my own, but everyone's different. People have different colors for different things. For me, for the support and the resistance lines, I will generally make my macro levels capitals. So if this is my macro range high, I'll either write macro RH or I'll just go capital RH. So now I know that if price comes up here, this isn't just a local range high. Remember, we're trading ranges within ranges. So this is not just our local range high from this section. This is our macro range high from the past 2 months or whatever it may be. So by capitalizing it, I already know that I'm looking at a more macro time frame, and I already know that if I were to short from somewhere up here, I could hold it all the way to the bottom. So it could be a swing trade. That's my way of remembering. People use different colors. You're more than welcome to do however you like. And to be honest, I switch it up. I get bored of colors and stuff, so I always switch it up. But that is generally, how you're trading ranges. And again, this works on all time frame, guys. So if you're scalping now, right? We're talking scalping only. I don't do it this extensively where I just necessarily focus on the range high and range low, within a 3-minute time frame, but you absolutely can apply this logic for anything, right? So let's just say this is our range low. Now, currently, this is our range high. And then I'll take a skinnier line, and I will, just by eye, look at what's our support and resistance. Right here, we have support. Right here, maybe like there. And right there-ish, we have our resistance. Now, these lines are subjective. There's no way to objectively do it unless you do what I mentioned, what I do on the monthly time frame, like how, you take 2 candles that couldn't close below a level. But on the shorter term time frames, these moves happen so quick that I don't find it's necessarily super accurate in that regard. But you can kind of just eye it like this, right? You just have kind of an idea. And if there isn't a clear range, I guess, or a clear levels of support and resistance, then don't trade it. If you're unsure, then don't really do it. Look at this, right? This is a pretty clear, yeah, it broke it, but it's going to do that. But this is a clear support line, right? Hit up resistance, fell below, came back up, rejected off the resistance, came back up, tested support, came back up, tested support. So this is how you're going to trade, or if you're going to scalp on the 3-minute, this is how you do it. You get your range high, you get your range low, you find your levels. Typically, actually not typically, you're not longing at resistance, and you're not shorting at support. If this dumps, oh well, you missed it, whatever. We'll figure out how to get you an entry later. But you're not longing here because, oh man, we're pumping. No. We're not longing here. And we're not shorting here. The time to short was up here, and the time to long was down here. So that's how you go about doing it on the smaller term time frames. And again, with the 3-minute, you can look outwards to like the 24-minute and say, okay, am I objectively in the lower quarter or lower third of the 24-minute? Then in general, we should be favoring longs. Now, this is what you're gonna use it as you're gonna use your indicators as confluence with that, right? Again, it doesn't mean it's gonna always bounce. So you need to take the previous lessons that I've taught and of course like apply them. But in general, we don't support, or we don't long resistance, we long support, and we don't short support, we short resistance. And I don't care how much it looks like it's going to break down, because we all know Bitcoin can do this, right? We all know that. Okay. Anybody have any questions so far? You guys can unmute while I drink some water real quick. Okay, no questions, no comments. We're all on the same page here. All right, let's continue then. Now, trend lines are next. Sorry, I'm getting an alert here. Trend lines are next, and I'm not a very firm believer in trend lines, but I mean, they are respected relatively. Again, I just follow the money. So like, it's not that I don't believe in them. It's that I don't believe that it worked because you decided to draw a line there, right? Remember, like anybody that you learn from on YouTube or wherever is retail, right? Like the guys with money are not teaching you how to make money. So if 95% of retail loses and you're learning from retail, you know, that should be a kind of a signal for you. Sorry, my phone is going off like crazy. Right? That should be like a little clue. Like we shouldn't really be paying attention to that. But yeah, that's what I mean by I don't really believe in them, is like, you know, it works until it doesn't. And in this case, it worked out, but it's not because you drew the line, right? There's other reasons. There's liquidity, there's vector candles, etc. Again, if you don't know what I'm talking about, go back and watch the previous videos, guys, for the YouTube people. Anyway, so at this point, you can kind of draw your trend lines. Again, just like anything, they're more accurate on the higher term time frames. And really, if anybody knows CryptoFace and how he draws his spider lines, right? I think it was from like all the way back here. All spider lines are support and resistance. So if I come here and I get array tool and I get this top to this top, or sorry, not support and resistance. All it is a trend line, right? It's nothing fancy, but it's just a trend line. And you can draw these lines all over the place. Like you can do this, right? Like it can get pretty wild. But that's all it is essentially, is just extended trend lines. Rays go on for forever. Anyways, we're not going to get too much into that, but yeah, so that's trend lines. And then at this point, that's where you can draw your trend lines, right? I don't really use it. Honestly, I don't. You guys are all well aware on how I feel about these triangle patterns and these nerdy geometry shapes. You're all well aware of it. So I don't typically do it, but you can do it for extra confluence, okay? Now, how do we know? Well, we objectively know what's high and what's low based on our range, right? But how can we get more confluence than just that? Right? How can we know when to short and when to long? Are we going to wait for the top every single time? Well, no, because it doesn't always get to the top, right? So I'm going to just delete the lower term time frame lines just so that you know, we can see everything very clearly. I'm going to use the higher term time frames, but this works for everything, right? This works for everything. So along with our support and resistance lines that we can find by using our eye and our absolute highs and absolute lows, right? This is our macro low, so this is going to be capital RL. So along with this, we can pull something called this fixed range volume profile. For the ones that are unaware, this is on the left here where these like little line and diagonal thing is, the long position tool. You click that arrow and you come down to fixed range volume profile. and you essentially just drag it across your range. So this is a volume profile, right? Based on just this range. And you can do it on anything. Like I can make the range way bigger, and I can move this back here if I wanted to and consider this a range, right? I like to do it within your super local ranges and like your, and this is a very clear defined high, clearly defined low. So I like to do it in this case, but this is your volume profile. And this is how we can find other supports and resistance. Now, volume is what moves the market, right? It's all volume. The whole the market is about money. Market makers move towards the money. So this is a very strong tool to use. Now, this red dotted line on the bottom is our value area low, and this one on the top is our value area high, and this center line is our point of control. So what does that mean? In our range, the majority of the price is, or the volume, I guess, is traded within this smaller range, right? Within this price. The majority of the volume is within this smaller range, okay? This is what's considered a fair value for Bitcoin or whatever asset you're trading. This is our fair value, what's considered fair based on our range, right? So that means by default, anything above our value area high is considered overbought. Overbought. Anything below is considered oversold. So in confluence with our ranges and our kind of like, oh, we're in the top third or bottom third or whatever, whenever you're below the value area low, you should be looking for longs. And whenever you're above the value area high, you should be looking for shorts. Again, that does not mean long crazy and short crazy every time. Because if you shorted here, oh, we're above, well, you just got wrecked. So you use your other indicators and your other tools. But this is our volume profile. Now, yours is going to look absolutely horrendous compared to mine, right? Yours is going to look like that. You can go back and change your settings, and I can share my settings for you. Actually, let me do so right now. These are my settings. Screenshot, pause it, and come back. Oh, we're dumping. Ooh. Come back and screenshot that. I just changed some colors and stuff. Make sure you have your value area low and your value area high clicked. Otherwise, it won't have those lines. And the difference in those lines are just like this shaded area is just considered above the value area high. So I'm getting distracted. We're actually like really dumping right now. Anyway, yeah, so that's your volume profile. And objectively, anything below is considered oversold. You're supposed to look for longs. And anything above, you're supposed to be looking for shorts, right? Do I have stop losses in place right now? Yeah, I do. Okay. Okay. So now you can use this and use this as confluence as well, but you can apply this to all ranges. So if we were trading, if we're up here and now we established kind of a new mini range and we're trading up here, you can do the same thing that I did with the macro range. You can pull up your fixed volume profile in just this area and look at this now. Now you have an objectively overbought area and an oversold area, right? But we need to be aware that we're at the top of the macro range. So if you're scalping or day trading, you can say, yes, I'm looking for shorts while I'm below the value area low, or sorry, longs. I'm looking for longs up when we're down here. But you need to use your indicators, right? Like, because objectively, we're still in the high of the macro range. So you need to be aware of your environment. And that's why if you've ever seen on YouTube, people say identify your environment, that's essentially what they're talking about, except they don't have the amazing articulate skills that I have and can't explain it properly. But that's what they mean, right? You got to know your environment because, yeah, here in this small range, we're low, but in this macro range, we're high. So, how do you go about that, right? You need to just keep that in mind that price can dump. Absolutely. So that's your volume profile, right? And now we just essentially use our confluence with our levels that we just draw by eye. And remember what we did in the beginning. We came to our monthly, our weekly, and our daily levels, right? So if we have our fixed volume profile up here, and we have our point of control. By the way, our point of control is the absolute highest volume traded within that range, which is the middle line. I forgot to mention that, I think. I apologize. But now look at this, right? So in our smaller range, you can see we have a weekly level that is perfectly aligned with our point of control of the smaller range. So this is a good place to start looking for shorts if you're not, right? When we pump up here, you don't long here because we have resistance here and we don't long resistance. So we look at our levels, right? And so forth. Now, as the range expands and gets bigger and we spend more time there, we will develop more of these key levels to look for. So that's something to keep in mind. And you just look for confluence within your ranges and within your macro range, and you use them all together. Now, one other tool that is very powerful is our Fibonacci. Now, I'm sure you guys have all heard the term Fibonacci. Don't know how much you know about it, but I use fibs for a few reasons, but my main reason for fibs is to find the golden pocket and the 786. And yours is going to look similar to how the volume profile, yours is going to look disgusting. I'm not going to put you through that misery, but this is our golden pocket. Actually, we have one other level. This here is our golden pocket, and this is our 786, and essentially it's a retracement, which means a correction, right? Oftentimes, the price will come to your golden pocket or your 786. I don't really use any other fibs unless I'm on the macro time frame, which in this case I am. What I will do is I will turn on the 382 and I will look for confluence. I believe we had a weekly or daily there. We have a monthly level there. So now when I'm finding my levels and I'm writing them down, I will, have monthly here. So I know like this is confluence, okay? This is more resistance. Aside from that, I don't typically touch the 382, but I always keep the 618 and the 786 on. The 65 I don't really keep on because you don't need it. Like I know that it's in this general area, so I'll just turn it off, right? Just less lines, less cluttered. It makes it look a lot better. But yeah, we're looking for fibs, and we're looking specifically for these levels. Now, on the more macro time frames, the levels are a lot wider, right? A lot wider. But this can be especially helpful when you come to smaller ranges because they're not so wide, so they can give you a very accurate entry, right? If you're like scalping or whatever. Let's use this as an example. And I did not do this beforehand, so I don't know if this is going to work, but let's find out together, right? So you take your fib from the high to the low, you pull it down, and what do you know? We peaked up just slightly above the 786 and we rejected, right? Let me make this. Let's go blue. Okay, came up, popped our head right above the 786 and rejected. But you're looking for shorts when you come to that area, right? Let's do it this way. We take our low, the wick here. We come up to the high, right? We peaked below for sure, right? This was a crazy move, but it is what it is. In general, when you're at this point, you're looking for longs. And you're also looking for your other confluences on the bigger time frames, and they can overlap. So your smaller time fibs can overlap with your larger fibs. But in general, when price comes down to here, in general, we know that we're looking for longs, right? When we retrace into our golden pocket 786, especially on the higher term time frames, we're looking for longs. We're using our indicators. We're using our vector candles. We're using everything I've taught in the previous lessons. And, we're looking for longs. And we're using it with confluence, with our golden pocket, our volume, our by eye, like support and resistance lines. So that's how you're going to really find your exact levels. And right off the bat, I can tell you here, like we have the 786 and we have the point of control. So, this is an area that's strong confluence. We should be looking for a move up. And sure and behold, we did come up. Now, this can get a little bit confusing I'm not going to lie. The bigger the range, I think, in my opinion, the more difficult it is to trade, because then there's ranges within ranges, and it's like there's fibs everywhere and there's trend lines everywhere, and it can get a little bit complicated. So in my opinion, it's important to keep things organized by, for example, color coding or using capitals or lowercase, right? What I do personally when I trade is when I have a low, pretend we're not dumping right now, pretend we're still like in our range, right? When I have a low, I will take my fib from the absolute low to the absolute high, right? And I will draw a box around it. Okay. Now, I'm recently changing my color scheme, but I will draw a box around it. And let's just say, in my mind, I know that anything that's green, oh, that's ugly. Anything that's green is our macro fibs, which means the absolute low to the absolute high. Okay? I want to be clear on that. The absolute low to the absolute high. And vice versa. As price starts to develop, right, then we will draw our fib from the absolute high to not our absolute low, but to our next low, right? Because the absolute low happened previous to the high. So we don't pull it from like here to here because it's backwards. So we have our high and then we pull it from our new low, okay? And then I will take a green box because I know that this is my macro level. And I know right off the bat that this is my fib. Look at this. Look how many times we spiked into the fib, right? So the people that are shorting here like idiots, sorry if you're one of them, but if you're not, then, you know, you'll get some info from my lessons here. If you're one of the idiots that short from here, look how much time you had. This is the 4-hour time frame. Look at how much time you had to short. You had 4 chances to short, and you're shorting from here because someone on the internet told you we're in a head and shoulders and we're breaking down, and this is your signal to short. This is your signal to short, not here. You know, don't be stupid. Anyway, so I know that this is my macro because it's green, right? Now, it can get confusing because it's like, well, Geo, this was the high, but then this is a high, and then there's a fib. Like, you know, I can draw a fib here to this low and whatever. And I would say you're absolutely right. It can get confusing. So what do? I will draw another fib. And I know that this fib is not my macro fib, for example, or I'll use a better example. Let's say this one, because I day trade and I scalp. So we'll say here, right? From this high right over here to this low. It's not a macro. It's not from the absolute high to the absolute low. It's within it. So what I do is I will do that. I will get a box. I will draw my box, and I will not make it green. I will make it blue, right? So now I know, let me get rid of the fib. Now I know that this fib is a golden pocket and 786, but it is not a macro golden pocket and 786. So if price is looking bullish like it was here, and I'm in my golden pocket 786, I'm aware of this level that's above. That is more important because the higher the term time frames, the more macro it is, the more important. I'm aware of this level. Okay? But that's an example on how I use colors to determine where I am in terms of your time frame, right? We're doing ranges within ranges. So that's important. Now, I could do the same here, right? Going up, if I do a fib like this, look at this, guys. Like, it's crazy how much this works. And I didn't practice any of this before. We have our fib, from the absolute, but from the bottom of the range to the top of the range, we come back, we hit our level, and we bounce, right? Eventually we fall through, sure, but we bounce. So this would be a blue square because it is not my absolute low to high or high to low. So I know that this is not like the mega range, like this whole big range. It's just this range within this range, right? So you use your fibs, you use your trend lines, you use your support and resistance by eye, and you use your volume profile to essentially find as much confluence as you can within your ranges. Now, I'm not going to go into how I label, I'm I'm not going to go into how I label everything with my boxes and stuff in this session because we've been running for I don't know how long, but I have stuff to do later. So on the next session, I will go over how I actually label this, and perhaps we'll do some live TA for you guys, and you know, kind of give you an idea on just how I label it and how, like, what I do with my grouping and all that. But this is essentially like how to trade ranges 101, where you can use multiple different confluences, even where like you zoom way out and you don't know, okay, well, is this hot? Like right now it's high compared to 15K, but it's low compared to our all-time high at 69K. So, you know, what the hell, right? But this is how you can objectively find points in the chart that are high and low to long or short, and how you can use our different indicators, right? My market cipher B and my vector candles, along with your levels of confluence within your ranges to find trades. And it's really not that hard. I know it sounds crazy when I say that, but you know, your fibs are the money, right? Like if you're ever unsure of what to do, start pulling fibs and experiment with them, right? Like if you're in a longer term, like we're on the 1 hour, right? So if you enter here, and it's going to take some like discipline, okay? I'm not going to lie to you. But if you're on the 1 hour time frame and you're only trading the 1 hour time frame, right? You don't have that much time in the day, etc. If you didn't long from here, and then over the next like day or so or a few hours, it pumped, you could feel the FOMO, right? If you didn't get in here because your level was a little bit lower. And this happens, guys, like this happens. But your level's a little bit lower, so you didn't get in, and now we start pumping, and now you're like, damn, like I need to long. And let's say you long from here, and you're longing right into the point of control, which is a horrible idea. But, you know, it's going to take some discipline to know that you shouldn't do that. When in reality, you know, the next day, like you could have longed here, went to bed, and then got liquidated, right? So I very much encourage you to stick to your levels, stick to your plans. Again, in the next one, I'll show you how you can enter, where to put your stop losses, etc. But if this hypothetical scenario, you know, someone was disciplined and didn't take the long from there, then they would have, you know, reaped the rewards if you longed from anywhere here. And especially if it's a long term, like this is kind of a day trade, it's on the 1 hour. But look at what you had. And if you longed from here and you got stopped out, and then you're like, oh man, I'm scared to long now. Well, look at what you just missed, right? So it's very important to stick to your levels. And again, like if you're ever confused or you're ever lost or you don't know what's going to happen, man, fibs all day, okay? All day. If you guys want, comment below for the YouTube people. If you want me to make a video on fibs more extensively, I will. This is just under the assumption that you have some basic knowledge on it. It's not that complicated. There are other tutorials on YouTube as well, so I encourage you to go check them out. But if you want me to go explain it, I will. But yeah, fibs are the money, man. And in this case, again, it would be a blue box because we know that it's not our absolute low. Actually, in this case, it would have been the green box because at the time of the range developing, this would have been our absolute low to our absolute high. So I would have this as green. And fibs, just like any of your levels, you will adjust based on the price moving. So as the price moves, your fib moves, right? And you can do fibs within fibs, like again, within levels, right? If, let's say you're trading on the 1 hour, and let's just say you missed this move, right? Well, what do? Okay, you missed the move. What do? You pull the fib from the low to the high, and look at how many chances you had to get in. 1, 2, 3. Give or take 4 or 5. Sometimes you can front run it a little bit, but that's what you do. You wait for the fibs. Your golden pocket 786 is gold. These numbers are gold. Everything else doesn't matter. This. When you're in this, you can long or short. It can go both ways. Right? Look at this. We're on the 1 hour time frame. We have our high. Let me get rid of this and let me zoom in so it's clear for you. We have our high. we pull it down to our low at the time, right? We have our high, we pull it down to the low, we come back up, hit the fib and drop. So if you ever don't know what to do, if like wait for a fib or wait for the golden pocket 786. If you're not in the golden pocket 786, don't trade, right? They're very high probability setups. And again, for the last time today, you look at your other indicators and everything else I've taught in the previous streams to get kind of an idea. Guys, do you have any questions or any feedback? I want to hear from someone. Someone please step up.
Hi, I just woke up.
Good morning.
It's a great analogy. So
cool. Anybody else? Are we on the same page here? You guys need to understand this because, you know, in whatever kind of trading you're doing, whether you're swing trading, scalping, or day trading, it's ranges within ranges, right? So we'll talk about the different time frames and what you should use and what you should look for based on how you trade. But for the time being, this is the general, like, this is the bread and butter of it. You need to understand this. Okay, well,
no, I just want to say that I was pretty covered with how you said everything.
Cool. Thank you.
Pretty understandable.
I appreciate the feedback. Okay, guys, if you don't have any questions, then I will leave it at that for today. I appreciate everybody coming. And, you know, practice these. Get your fibs out. And they work on all time frame, guys. If you're scalping on the 1 minute, it will work. So get your fibs out. Ooh, we're dumping right now. Yeah, I'm going to go monitor my trades. But I will leave you for now, and we'll chat later. Thanks, everybody. All right, for the YouTube people, if you like the content, please make sure to like and subscribe. I really appreciate it. I appreciate your time, and we'll see you in the next video. See you guys.